The IMF previewed its global growth outlook this morning ahead of its World Bank meetings next week, and it's not very optimistic. Yahoo Finance's Jennifer Schonberger has the details. I'm looking at the worst prediction since the 1990s here.
Hey there, good morning, Jared. That's right. IMF Managing Director Kristalina Georgieva giving a speech just now, her so-called curtain raiser speech ahead of the IMF World Bank spring meetings next week, where she said that the IMF expects global growth to expand at less than 3% this year. Now, they're going to release their official World Economic Outlook next week, where we will get more details on this outlook. But that's about in line with their estimate back in January of 2.9%, which was 0.2% higher than what was forecast back in October. But looking ahead, things look more dour. The IMF projects global growth to remain around 3% over the next 5 years. That is the lowest medium-term growth forecast since 1990 and well below the average of 3.8% from the past 2 decades. In 2023, emerging economies are the bright spot, with India and China expected to account for half of global growth. The IMF sees economies in the U.S. and Europe slowing, however, where higher interest rates will weigh on demand. About 90% of advanced economies are projected to see a decline in their growth rate this year, says Georgieva. With rising geopolitical tensions and still high inflation, a robust recovery remains elusive, says Georgieva. The managing director also weighed in on navigating inflation in the midst of these global banking issues following the failure of Silicon Valley Bank and Credit Suisse. Georgieva says as long as financial pressures are contained, central banks should, quote, stay the course, implying continued rate hikes to bring down inflation. But at the same time, she said, quote, that central banks should address financial stability risks when they emerge through appropriate provision of liquidity. She said the key is to carefully monitor risks in banks and non-bank financial institutions, as well as weaknesses in sectors such as commercial real estate. Now, she also added concerns about vulnerabilities may be hidden in banks and non-banks, and that, quote, now is not the time for complacency. Jared?
All right, I'll take it from here. Thanks so much. Yahoo Finance's own Jen Schonberger.